what about Bandhan? I just want to pull up Bandhan Bank. Bandhan Bank, just because top picks for a few of the brokerages and got hit very, very harshly when these strictures came in. So, Neerav, first view on Bandhan, and then I'll come to Shrikant.
No, I think we'll stay away from for the time being.
Okay. So fundamentally, stay away from credit access, stay away from Bandhan. Shrikant, your view on both, if you are maybe feeling stuck in it, time to exit?
See, for Bandhan Bank, yes, the trend is very clearly down. It is finding a lot of difficulties to sustain at higher levels, and whenever there is a fall in the market, the stock is correcting. And it was around some 650, 700 levels. From there, all the way it is as 135, and still the stock is not like showing any signs of reversal. So I'm of the view that it is better to stay away from the stock. But yes, for credit access Grameen, if we consider the volume of last 2 months, then there is like dramatic change in that. Good amount of delivery-based volume has also happened, and based on its technical formation, at current levels, it is moving upward, and it is again chasing the upward levels, 1100, 1150 sort of. After the dismissal of 1150, we could see the levels of maybe even 1400 or 1500. So broadly, I'm of the view that the stock has already formed its bottom. Now, till the stock is not falling back below the levels of 850, we can see a very strong rebound or pullback in next few weeks. And it to the entire fall by at least 60%, then also in that case 1500 possible. So risk-reward ratio is quite favorable for credit access Grameen at current levels.
Okay. So credit access Grameen may look better than Bandhan when it comes to the charts as well. Thank you so much, Shrikant and Neerav, for speaking with us today. Interesting morning as two big announcements play out. But next up, our conversation with transformers and rectifiers. They're in the spotlight as the stock was buzzing. Before we're joined by the management, Anushi joins in with the latest on the company and their outlook.
Right, Tamanna. So if you look at transformers and rectifiers, it's been a couple of strong quarters now for the business. This is reflected in their Q3 numbers as well. And we've seen about a 51% of a growth in terms of revenue. Margins inching upwards in the range of 15% as compared to 10% last year. And net profit standing at 54.7 crore versus 15.6 crore. In fact, even if you look at the 9-month FY25 picture, revenue growth was in fact higher at 71%, with margins at 14.6% versus 7.95%. And net profit at 120 crore compared to 4.5 crore. Now, it's the order book also, which is an interesting one. The company recorded new order inflows of 631 crore. Now, their target being taking orders in high margin ticket orders as compared to what the focus was before. Unexecuted order book stands at about 3,686 crore. And if we see the inquiries under negotiation, they have a pipeline of around 19,000 crore here. Wherein in the export side, they want to limit the exports to 20% of the business. Coming to a couple of key developments here, they've acquired a controlling stake in the CRGO processing unit, which is in line with their backward integration targets. And this would lead to a resulting 4% reduction in their raw material costs also. Order booking here is expected from the fourth quarter of this financial year onwards. In CAPEX plans, they have a CAPEX project for 15,000 MVA capacity expansion, which is going to be operational from March of this year, and anticipated ordering from this is expected to start from Q1. In terms of revenue guidance, they expect a 2,000 crore of revenue guidance for FY25 with a target of 3,500 crore of revenues by FY26. So overall, a pretty strong trajectory that we are seeing in terms of where the ordering is, what the target is given by the company, and what the numbers have reflected for the business.